Closely watched investor Cathie Wood doubles down on Bitcoin. She now wants to start an ETF tracking the digital currency.
And yet when I look at where it is right now, it seems to be weathering well. This 30 to 40,000 range seems to be a good testing zone. Frankly, I feel better that we are in the midst of a correction and everyone's doing a reality check and trying to figure out all the risks and the opportunities associated with the various cryptos. Our confidence in Bitcoin has not diminished at all.
Cathie Wood's ARK Invest filing for a Bitcoin ETF with the SEC. This will be called ARK 21 Shares Bitcoin ETF if approved. A number of companies have filed and are waiting for SEC approval on a similar offering. So sort of an uphill battle here. A lot of folks waiting on the SEC to approve this. Cathie Wood has a history with crypto and Bitcoin. She has been buying the dip here with proxies like Coinbase, GBTC on the dip here. And she's now cutting out the middleman and going for it herself.
Cathie Wood doubles down on Bitcoin, filing with the SEC for a Bitcoin ETF. In her most recent video update to ARK Invest stakeholders, Cathie Wood shared why she is so confident in not only Bitcoin, but also Ethereum and the entire cryptocurrency space. She also shared her thoughts on inflation and if the US is heading towards hyperinflation. Make sure to stick around to the end of the video where we cover some very fascinating inflation data as well as some bullish on-chain Bitcoin data. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing. It's free and you can always change your mind.
One other thing on demographics, the three areas where we believe millennials will spend, and I believe Fundstrat would agree with this, certainly stocks, housing. Yes, don't think innovation is going to change that so dramatically, except maybe houses without kitchens. So there will be much more in the way of food deliveries. But of course, this demographic is very interested in crypto as well. And this week, we learned that stablecoins had crossed $100 billion. 20 billion of which is USDC, and that's up tenfold in just 1 year. We also got an update that DeFi now accounts for $67 billion, roughly $70 billion of the value locked in Ether. So that also is up at least tenfold, probably more than that. NFTs, we're hearing a lot about that. So it seems like Ethereum is finding a lot of support. Certainly those three are built on top of Ethereum. Of course, Bitcoin is, which we still believe is the reserve currency of the crypto asset ecosystem, understanding that stable coins could be giving it somewhat of a run for its money. But we also heard that, or saw through his tweets, that Elon is maybe not as high on Bitcoin as he once was. We don't know. We don't know if he sold what he put on the balance sheet as a diversification from cash. So we have seen a little bit of indigestion from all cryptos because of this. And yet when I look at where it is right now, it seems to be weathering well. This 30 to 40,000 range seems to be a good testing zone. Frankly, I feel better that we are in the midst of a correction and everyone's doing a reality check and trying to figure out, all the risks and the opportunities associated with the various cryptos. Dogecoin is amusing. Our analyst Yassin El-Mandra is going to be writing up some of his thoughts about why it will not become the reserve currency of the crypto asset ecosystem. And in fact, a lot of this is based around network effect and the security of the network, which is all important when it comes to transferring large sums of value. And so our confidence in Bitcoin has not diminished at all. Our confidence in looking at the Turkish lira in some of the emerging market currencies is diminishing. And I think that will be continue to be a very fertile area of growth, meaning the emerging markets, individuals diversifying into crypto assets, as well as those of us who just want insurance policies against any confiscation of wealth, whether it is inflation, and as you know, we don't think inflation is the problem in this country, but if we're right, it could mean that inflation in other countries, meaning emerging markets currencies especially, in unstable regimes especially, could become more of a problem. Now, the monetary policy side is also very interesting. The Fed, despite what everyone seems to be saying, the Fed is already starting to react. Interestingly, the money growth rate, so M2's growth, peaked in February at 27% and is now down to 18% on a year-over-year basis. I haven't seen it below the 20% range in more than a year, I think, or roughly a year. So that's very interesting. Anyone worrying about inflation will have to take note of that. 18% is still a very a rapid rate of growth, but the direction has changed unequivocally. The other thing that happened this week is the Fed said it was going to unwind some of the bond ETF and outright bond purchases that it made during the depths of the coronavirus crisis. Now, this is only $60 billion, which is nothing when M2 is at roughly $20 trillion and the monetary base close to $8 trillion. But nonetheless, it's a change in tone. Again, those worried about inflation have to take note. Part of the reason for this is lumber prices. Lumber prices have more than tripled in the last year, actually much more than that. And I think some builders, we're hearing anecdotes, just they can't get some of the supplies they need to finish homes, and so they are just going to take the summer off. And we're beginning to get clues that this shift away from goods to services generally, extrapolated or exacerbated, I should say, by what's going on in housing, is having an impact. A lot of the inflation is coming from transportation, hospitality, and leisure. Again, these areas of the economy are just starting to open up, and they have some pricing power. They need to recoup some of the losses from the last year, and that's what's happening. We do not believe this is going to be sustained. If we're right, there are a couple of reasons. One, businesses. I mean, this is going to be like Wile E. Coyote. Businesses are scrambling to catch up to the consumer, but the consumer's left. So Wile E. Coyote's off the cliff, and I think we're going to see a pretty serious drop in commodity prices.
I think we have individuals now involved who really understand the space, and I think the likelihood has gone up. What has surprised us, we expected institutional interest to pick up this year, and it certainly has. But the way in which it's picked up has surprised us. I don't think we ever thought there would be broad-based substitution of Bitcoin for cash on corporate balance sheets. So we find that very interesting. If all corporations in the United States were to put I think it's 10% of their cash into Bitcoin, that alone would add $200,000 to the Bitcoin price. Now, we obviously do not believe this is going to happen very quickly. We're talking about maybe the equivalent of $900 billion market cap equivalent for for Bitcoin. That's less than half the price of the Apples and Amazons of the world. So this has to mature a little bit before broad-based adoption can take place. But we're very reassured that companies like Square and Tesla have chosen to allocate. They're on the right side of change when it comes to innovation. And therefore, we think it's wise that they diversify some of their cash. And I think the biggest surprise to many Tesla doubters is that it is now in a position where it has that much cash that it is diversifying.
So Cathie Wood from ARK Invest is starting a Bitcoin ETF. Wood has been a longtime crypto bull. She's also gotten a wide following on social media and on Reddit. Some people call her Queen Cathie. She's got entire forums devoted to sort of following her trades and what her ETFs do. And so she is really seen as a barometer for some of these high growth stocks and interest from retail investors. In that sense, this is pretty symbolic that Cathie Wood is getting into Bitcoin directly versus betting on Coinbase, Grayscale's Bitcoin Trust, which are sort of these indirect ways of buying Bitcoin. This way, if she does get approval for an ETF, she's able to go directly, give investors exposure to Bitcoin prices.
So there's Cathie Wood on why she is so confident in Bitcoin and cryptocurrency, giving some insight into why she has filed for a Bitcoin ETF. Also interesting is her take on inflation, inferring that it is not as bad as other investors would suggest. Looking at oil and commodity prices, it is there, but Cathie's suggesting, like the Fed, that it is transitory. Now, to illustrate the inflation problem, today I came across this graph showing price inflation of goods and services over the last 20 years. You can see why there is arguments over figures such as CPI and just how bad inflation is, because as many goods included in the CPI measurement are becoming more affordable from economies of scale, other necessities such as housing, food, and medical treatment is getting much more expensive. Now, switching over to Bitcoin, some recent bullish data out from Yan and Jan. Bitcoin balance on exchanges now tentatively falling after a huge influx in May. A continuation of this trend would be very bullish heading into July. Anyway guys, hope you enjoyed today's video and that provided you with some value. Let me know in the comments if you agree or disagree with Cathie Wood on inflation. I'll see you in the next video, and as always, have a great day.